All right, entry work part two. I wanted to split this video up into two videos. Y'all see me looking at the lyrics to Chris Brown. This song is fire. But irrelevant right now, we are talking about entry work. So right now, I want you guys to look at, entries as a segue to being a great trader, because obviously you need the psychology, you need the risk management. But with entries, you don't become a profitable trader if you are not, specific and methodical with your entries. I say this all the time. Anybody can accurately predict where the market is going to go. It's just a matter of timing, and that timing comes down to entries. Now, I have one of my favorite pairs here, GU, here just in general. And I want to give you guys an example on what the daily and the 4 hour and all those time frames are usually for. And mind you, remember, we're talking about intraday trading, meaning we get in, we get out the same day. Understand that the daily time frame is not to be looked at to be traded on. For example, we're not looking at, okay, it went up right here, so way up here, all right, it's still in the uptrend. Or, let's say, for instance, screw all of this, it dropped right here, so we way over here right now, and it's going to keep dropping. No, we don't look at the daily for that, because it's going to take too long. You guys are intraday traders. But the daily can be a great tool to help us get better entries. And let me elaborate on that. So if you are looking to enter a pair, or let me take that a step further, if you haven't entered a pair yet and you're looking to see what the market wants to do and like the bias for the pair, start off on the daily for sure, right? And when I talked about my last video, like I talked about, analyzing and really breaking it down in the 4 hour and below, but the daily leaves clues in terms of what it's going to do going forward. You see right here where you get this, some type of right here, you get a tweezer top right here, right? You get it right here, and it matches a little bit lower, but it matches the similar resistance of the previous tweezer top it did. So let's just draw this, this key level over here, right? This resistance. And now we have one tweezer top drops. One tweezer tops drops. Now understand, once you see this red candle and this tweezer top on the daily on May 1st, this was on a Friday, right? So this is on a Friday. So on Monday, when it opens back up, you should be looking at the 4 hour and the 1 hour to see, all right, what is the market going to do? Where can I find my entry to go down? Because once you see it on the daily, all you got to do is get onto the 1 hour and the 4 hour, and you can see clear as day. Boom, drop, slowly decline. Moving average crossover, a little bit of a spike, boom, drop. Your entry could have been any one of these. Preferably, let's go back to the daily really quick. All right, so we see we need this whole candle to drop first. So we're gonna draw a nice little line right here so we can at least see where it stopped at in terms of like finishing the candle. We go back down to the 1 hour time frame, head all the way back over. So you can see right here, and this is so clear as day, which I'm glad. So your entry easily could have been any one of these. So look at this. This was where the tweezer top closed at on Friday. On Sunday, when the market opened, what did it do? It came down, retested this area, which was where the tweezer top was, right? Retested this area. Once you get the retest of this area, you easily could have gotten in, and I'm going to be very transparent with you guys, once the moving average crossover. So it's not just this candlestick right here where you see like, okay, and this is where you got to put all the tools together. Remember what I told you. If the moving average is in the middle of candlesticks, it is still consolidating. So no matter if we got this retest and drop back down, it would affect a lot of people out. The moving average is still in the middle. Red isn't over the blue yet. So that's not enough confirmation. This is where you got to exude patience. Over here, this is a retest, still nothing. We need a moving average crossover, and you can slowly see how it's crossing over in between. Your entry could have been any one of these. Any one of these, because you already got the retest. So understand this, once you got the retest, you got 1, 2, 3, about 3 retests already, and then you got a moving average crossover afterwards. More times than not, the candlestick that you are entering on or anything going forward will not come back and retest it again. It doesn't need to retest. It retested it 3 times already, and the moving average crossed over. If the moving average didn't cross over, it can retest as many times as it wants. the fact that it retested 1, 2, or about 3 times, and then moving average crossover, you know for a fact, all right, it's going down. Just a matter of me placing my stop loss. That is more of the key. The entry is a little bit easier. You could easily enter on this. Let's just say we entered, somewhere around here. Let's just say we entered on this one right here. Stop loss could either be right above here or right above here. Preferably, we want our stop loss a little bit higher. But if you want to get sniper-like entries, you could have did a stop loss right above this little lower high. But the more conservative approach would be above here. I'm not going to tell you guys exactly what you should do. I personally would probably have put my stop loss right above here, and once it dropped a little bit lower, then move my stop loss to like right here, and then when it drops some more, move my stop loss to right above here, over here. You know what I mean? But initially, I probably would have had it right here just to give myself some more breathing room, because even though it wouldn't have retested, it could have easily, just like it did this wick right here, wicked out, stopped you out, and then dropped. So more times than not, the correct way of trading is to place your stop loss above the original last, lower high in a downtrend. So we have our stop loss right above there. Now, take profit wise, we got to look at some kind of key levels. When I say key levels, I mean in terms of just support and resistance in general. So we go back to the past. We see price stopped right here before heading all the way back up. We see price stopped right here before heading all the way back up. And we see price stopped right here before heading all the way back up. And this 122 comes in at around 123 flat. This comes in around 122,500. And this comes in around 124. If we draw obviously a rectangular box around this, which was in that range. I can delete that right now. So in order to actually and actively trade, we would have dragged it down, and I wouldn't have had it right here, because I feel like if you go back on the daily, this is where you got to be smart and use your eye test. If you go back on the daily, we see a tweezer top on a daily time frame. Chances are it's not going to just go right here and then go back up. Not at all. After we see this big candlestick formation, I'll get more into this in the actual candlestick patterns and formations, just in general. I think it's in another section in here. So chances are it's going to go a lot further than that. So this is where you use your prediction, and you predict that it's going to go a lot further than what it shows. What it shows right here is, in the past, GU, while it was on the uptrend, it started right here, stopped right here, stopped right here, and then it got right here in reverse. All 4 of these are key levels in terms of where price will stop at, where you should place your take profits at, where price will stop at again in the future. So since it's so close, I would have put my take profit to this one originally, had this as my first take profit, this is my second one, and honestly, I would have had right here, the stoppage right here, this is my third one. Until price gives me a reason not to get out. You know what I mean? And if price would have dropped below here and even closed, then my take profit would have probably been, I see price stopped right here before heading back down, somewhere right here. Now I use these, these little levels, these little mini levels on top of my actual key levels. The key levels, I have it off like the eye test, and have it in general with, what I usually see from, my eyes in general. I don't draw too many specific key levels on here because, like I said, with naked trading and with the eye test, I already know it by heart. So delete this, have that off. Now, obviously, we see already in time price went way down here, but we gotta act like we don't know that due to us being traders right now. So originally, my full take profit would have been this level right here. Price comes down, we get a doji, we get a morning star, it heads back up. This is not a scenario where we're like, all right, we're just gonna, take partial profit and get out. You can take partial profit when price is dropping and making, lower highs and stuff, but once it got to your overall level, you potentially get out and reassess yourself. So after the trade is done, price, what does it do? Immediately creates a morning star, heads all the way back up. This little ellipse tool. Cool. Back to the daily. Right back over here. So you see clear as day. Price came down, placed a doji on the daily time frame, slowly headed back up to retest this 124 level, which is why it's imperative to keep these levels on here, because this is the original level we had. Now you see something profound, which would have told us that it was heading down some more. This level did not actually physically retest. It still was shorter than the others. Let me go back to the 1 hour time frame. So if you look at this level where we had the actual, retest 1, 2, 3, because remember, this was where it closed out on Friday, open on Sunday, retest, crossover, moving average down. When it came up to retest, what did it do? It did not retest accurately. On top of that, I see an actual counter trend line from here to here. Now, with the counter trend line, I will get more into that in series 2, but obviously what counter trend lines is, it's just an actual trend line that goes against the overall trend. So what that means is we have a counter trend line in place, and this is what I mean by, the more you're into my series 1, series 2, series 3, use your resources and put it all together, have some experience and some time, the more it all comes together and it makes sense. You got to use all your tools. Trading is not just some 2-step process or 3-step process. You got to use every part of your brain and your knowledge to really, put it all together. So we have price. We know price right here does not retest this actual major resistance. It comes down, comes up, creates what? A lower high, starts placing dojis. Lower high right there, lower high right here. And now we get this dump off right here. Come up, comes down. This is a 1 hour time frame. Let's go on to the 15-minute time frame, even farther down. Let's really get our sniper entries working. And we go right here, and we can see the moving average crossover clear as day. This doji right here, shooting star, comes down, confirmation. Now, the moving average crossover a little bit before that, but it was, consolidating right here. So obviously I would have waited for the break of consolidation and it closed. It closed right here. Your entry is right there. Amidst of this close. Stop loss right above this high. And now your take profit, we can obviously go down again. We can scale back in time. That was the 15-minute time. Let's go to the 1 hour now. Back to over here. Just past it. Right here. Cool. So, as for take profit, remember, this was our original first take profit. This one right here. So be smart about it. Remember I drew this white line over here where it stopped at? What did price do? Price came down on our first take profit and stopped right here. So feel free to adjust. Okay, it didn't stop here this time. It stopped a little bit lower. Adjust. Let me do that. Let me do a horizontal ray. Adjust. Boom. Take profit right there. 1 to 3 risk to reward ratio. And then if price were to, hit this and come back down, I mean hit this and come back, keep going down, then you can either take, re-enter, scale in, do what you got to do. But this is our first take profit, our overall take profit, excuse me. So price comes down and it never really gives you a lower high to really move your stop loss into profit in. So you really can't, you may got to keep your stop loss way up here. If you're an actual trader, you may have gotten stopped out right here because when price is going down and made just a little bit of a lower high right here, you could have put your, your stop loss in profit, and price would have came up, stopped you out somewhere in between. Here's 2 things you can do to counter effect that. If you get stopped out in profit, but you see the trend is still continuing, feel free to re-enter. So I see that if you to put your stop loss right here into profit 2 ways, you could have easily left it as it is because it wasn't really no clear-cut signal. But if this is a clear-cut signal, then you put your stop loss right here. Obviously, keep the strategies going because over time, the discipline will make you a great trader. And then obviously, it goes up, takes you out, boom, doji, kind of a doji, not really, but a little bit of a doji, a little bit of a fake evening star, comes down, moving average crossover, and then we are down and off to the races. So obviously in the long term, we keep it going, keep it going. Obviously, let's just do another entry. Entry would have been obviously evening star, confirmation, entry right there, stop loss right above here, and you take profit again, since it obviously closed below there, we are looking for obviously a 1 to 3 risk to reward ratio. If I see it's 1 to 5, 1 to 1, 1 to 2, I won't enter. Let's see if this is 1 to 3. This just crossed 1 to 3. So I would have entered this trade. Trade goes into profit, trade comes back up, and then trade comes back down. And mind you, once it comes back up, creates this lower high, what do? Move your stop loss into break even, and this is still a little bit negative. So your stop loss isn't actually in profit right now because this lower high still is in drawdown a little bit. So now at least you are potentially will lose 5 pips, in your trade instead of 20 pips or 30 pips. So price heads all the way down, heads right to that take profit level, which is synonymous with all the way over here. Boom, boom, boom. And then price goes up, creates a lower high again, moving average crossover again. And the process continues where it's like, all right, I'm out this trade. I could potentially enter this trade. So let me start, Xing some of these things out, And I see a actual Fibonacci entry that I could have entered right here. And I'll probably do that in one of my next videos as well, where it's a Fibonacci entry as well. Keep working on your entries. Like I said, feel free to scale in. Keeps us a few rules into effect. Let me actually refresh this page and go all the way over really quick. Keep these rules into effect. I actually have a PDF you probably can download on the side, but I want to keep these rules that you guys have already in your mind. It is, don't be afraid to enter. Don't second guess yourself. Stop, Velvet. Don't be afraid to enter. Don't second guess yourself. If you see a lower high being placed in a downtrend or a higher low being placed in an uptrend, move your stop loss into take profit, obviously after you see a lower high or a higher low. Now, if you get stopped out, feel free to re-enter upon seeing price continue in your original direction. Like I said, I'll have all this in like a PDF you guys can download, but I want to make sure you guys understand that work on your entries. That is not the only way. You mix your entry work with your psychology. You stay disciplined, keep your risk management on 1,000. You will be amazed at where you are and how profitable you are. So I hope this entry work video 2 helped you guys a lot.